This video is created strictly for educational and informational purposes only. Nothing in this video is financial investment, legal, or tax advice. Past performance of aerospace assets does not guarantee future results. ETF Holdings USA is not affiliated with SpaceX, Tesla, XAI, or Elon Musk. We are an independent research and educational channel. All metrics and data presented are sourced from publicly accessible 2026 S1 draft filings, SEC disclosures, and institutional reports. Always do your own research and consult a certified financial advisor before making any investment decisions. On May 20th, 2026, SpaceX officially submitted its S1 prospectus to the United States Securities and Exchange Commission. This single filing sent shockwaves through every financial market on Earth. The ticker symbol is SPCX. The target valuation is $1.75 trillion. The capital raise target is $75 billion. If successful, this will become the largest initial public offering in the entire history of financial markets. Saudi Aramco's 2019 record of $35.4 billion raised will be completely shattered. For context, Apple, the most valuable company on the Nasdaq, took decades to reach a $1 trillion market capitalization. SpaceX is attempting to debut directly at $1.75 trillion. This is not just a company going public. This is a structural macroeconomic event that is beginning the largest wealth transfer in modern history. Capital that has been sitting in traditional assets for generations is now being invited to shift into the space-based infrastructure of the next century. The question every investor in America is asking right now is simple. How do I get a piece of this before June 12, 2026? Let us go inside the actual numbers that SpaceX disclosed in its official S1 filing, because this is where the real story becomes both incredibly exciting and critically important for every investor to understand. The total annual revenue for fiscal year 2025 to 2026 is $18.67 billion. This is real, confirmed institutional disclosure data. But SpaceX also reported a net statutory loss of $4.94 billion. Before you panic, this is critical context. This loss is entirely the result of heavy research and development burn across Starship development and the XAI merger integration. The Q1 2026 operational burn alone was $1.94 billion. Now here is the number that makes institutional investors extremely bullish. Starlink revenue contribution is 69% of total inflows. That means of every dollar SpaceX earns, almost 70 cents comes from Starlink. And the research and development allocation intensity stands at $4.5 billion, which represents a massive high barrier to entry that no competitor on Earth can currently match. Source: SpaceX S1 SEC filing May 20th, 2026 confirmed institutional disclosure. The most important asset inside the entire SpaceX IPO is not the rockets. It is Starlink. And Starlink is the closest thing to a pure utility monopoly that has ever been created in the commercial technology sector. As of March 2026, Starlink has reached 10.3 million active subscribers across residential, enterprise, maritime, and defense sectors globally. That number crossed 10 million in February 2026, according to SpaceX's own official statements. But the financial engine is even more powerful than the subscriber count suggests. Starlink is operating at a 45% EBITDA margin, which means for every $100 of revenue, almost half is profit. Starlink is on track to generate $27.5 billion by the end of 2026. This is the liquidity engine that funds everything else, including the Mars missions. Fortune magazine confirmed in its May 2026 analysis that Starlink is SpaceX's primary financial engine, accounting for more than two-thirds of all revenue and generating $1.2 billion in profit in Q1 2026 alone. The space and AI divisions both lost money, but Starlink is the cash machine that keeps the entire enterprise funded and operational. Now let us talk about the technology that is fundamentally changing the economics of space and why this matters enormously for investors. The cost to launch 1 kilogram of payload into orbit tells the entire story. Using the old NASA Space Shuttle, the cost was $54,500 per kilogram. using SpaceX Falcon 9 reusable rocket that cost dropped to $2,720 per kilogram, a 20-fold reduction. But the Starship target cost is approaching $10 per kilogram. That is a 5,000-fold reduction compared to the Space Shuttle and a 270-fold reduction compared to Falcon 9. This is not incremental progress. This is a fundamental restructuring of the economics of access to space. When you can move cargo to orbit for $10 per kilogram instead of $54,000, you unlock an entirely new economy. Satellite deployment becomes trivial. Point-to-point Earth transport becomes viable. Mars colonization becomes mathematically possible. This cost revolution is why SpaceX is being valued at $1.75 trillion and not the $10 to $20 billion that traditional aerospace companies command. Source: SpaceX S1 filing and comparative launch cost analysis from Institutional Aerospace Research. In February 2026, SpaceX completed a full all-stock merger with Elon Musk's artificial intelligence company xAI. The deal valued SpaceX at $1 trillion and xAI at $250 billion, creating a combined entity worth $1.25 trillion at time of merger. By the IPO filing date, the target valuation had jumped to $1.75 trillion, reflecting market confidence in the combined AI and space strategy. The synergy is being built on three transformational pillars. First, edge computing. SpaceX satellites are being upgraded to become decentralized AI data centers processing data directly in orbit rather than sending it back to Earthbound servers. Second, 80% less latency. By bypassing Earthbound data centers, SpaceX can provide real-time processing for autonomous navigation, defense applications, and global communications at speeds that are physically impossible through traditional infrastructure. Third, SaaS multiples. This is perhaps the most important financial insight. SpaceX is no longer being valued as a hardware manufacturer or a rocket company. It is being valued as an AI infrastructure provider, similar to how cloud computing companies receive premium software as a service multiples. This valuation framework alone could justify a significant portion of the $1.75 trillion target. Source: CNBC February 2026 xAI merger reporting and SpaceX S1 institutional disclosures. Here is the confirmed timeline that every investor needs to know right now. On May 20th, 2026, SpaceX made its SEC public disclosure of the S1 prospectus. This is already complete and confirmed. On June 4th, 2026, the Global Investor Roadshow begins in New York and Texas. This is where institutional investors, including pension funds, sovereign wealth funds, and hedge funds, will commit their allocations. On June 8th, 2026, according to Business Standard reporting, the official investor roadshows begin. On June 11th, 2026, the final IPO pricing and share allocation will be determined. This is when the official IPO price per share of SpaceX will be set. And on June 12th, 2026, SpaceX begins trading on the Nasdaq. This is the moment. The 5-for-1 stock split is planned to make shares accessible to retail investors. The company is targeting to raise up to $75 billion at a $1.75 trillion valuation in what would become the largest IPO in the history of capital markets. Source: Trading Key, May 2026 analysis. First Squawk, May 20th, 2026. Business Standard, May 21st, 2026. Here is the critical insight for ETF investors specifically. Most retail investors will not get meaningful direct allocation to the SpaceX IPO because institutional investors will take the majority of shares. But there are two powerful backdoor investment strategies available right now. The first is ETF power plays. ARKX, the ARK Space Exploration and Innovation ETF, has delivered 67.2% return and focuses on aerospace supply chains that directly benefit from SpaceX's launch cadence. UFO, the Procure Space ETF, has delivered 123.7% return, targeting pure-play satellite infrastructure companies that are beneficiaries of the Starlink ecosystem. Both of these ETFs already own stakes in companies that directly supply, manufacture, and support SpaceX operations. When SpaceX begins trading on June 12th, these ETFs are likely to surge in value. The second strategy is the Google Shield. Alphabet Inc., which is Google, holds a multi-billion-dollar private stake in SpaceX. By owning Alphabet, you gain indirect exposure to the SpaceX IPO with the safety net of a fully diversified technology company behind it. Alphabet is already inside VOO, QQQ, and VGT, which means millions of investors already have partial indirect exposure to SpaceX without knowing it. Source: ETF database analysis and Alphabet investor disclosures. No honest investment analysis is complete without a transparent discussion of the real risks. There are three primary risk factors that every investor must understand before the June 12th SpaceX debut. The first is key man risk. SpaceX's entire valuation is fundamentally tied to the leadership vision and execution capability of Elon Musk. Musk will hold 85.1% combined voting power after the IPO, owning 12.3% of Class A shares and 93.6% of Class B shares. This means public shareholders will have minimal governance rights. You can own economic upside, but you cannot influence corporate decisions. If anything significant happens to Musk's involvement, the valuation impact would be immediate and severe. The second is Kessler syndrome. As Starlink continues deploying thousands of additional satellites into low Earth orbit, the risk of orbital debris collisions threatening the entire hardware network increases. A major collision cascade could damage significant portions of the Starlink constellation. The third is FAA and SEC scrutiny. SpaceX operates in an extremely complex regulatory environment covering launch approvals, environmental impact assessments, and now SEC reporting requirements as a public company. Each Starship launch requires FAA approval, and regulatory delays have already impacted development timelines multiple times. Source: SpaceX S1 official risk disclosures. First squawk May 20th, 2026. At the conclusion of this analysis, here is the complete picture for investors in May 2026. SpaceX filed the largest IPO in history on May 20th, 2026. The ticker is SPCX. The valuation target is $1.75 trillion. The capital raise target is $75 billion. Starlink is the profit engine, generating 69% of revenue, with 45% EBITDA margins and 10.3 million subscribers. The XAI merger creates an AI infrastructure company valued on SaaS multiples, not hardware multiples. Starship is eliminating the economic barrier to space access with a 5,000-fold cost reduction. The IPO execution roadmap concludes on June 12, 2026, with SpaceX trading on the Nasdaq. For ETF investors, ARKX and UFO provide backdoor exposure, and Alphabet provides indirect exposure through existing ETF holdings. The risks are real. Key man risk, governance concentration, and regulatory complexity must be carefully weighed. The greatest wealth transfer in history is moving beyond Earth. As Elon Musk stated during the May 2026 Prospectus Roadshow, we are becoming a multi-planetary species. The question for every investor in 2026 is not whether space becomes the next great economic frontier. The question is whether you will be positioned to participate when that frontier opens on June 12th. Now tell us in the comments. Will you be investing in SpaceX directly or through ETFs like ARKX and UFO? Comment below and let us know your strategy. If you found this the most complete SpaceX IPO analysis on YouTube, please hit the like button and subscribe to ETF Holdings USA. New breakdown every single day. This video is for educational purposes only, not financial advice.